It starts Monday. I'm your host, Steve Van Metre, and thanks for joining me today. And our lead story today, the biggest market-moving event of 2024 begins tomorrow. And that's what we're doing at Goldman Sachs today, to look at the flows of the market and what's coming on Monday that could be the catalyst to drive the U.S. equity market to even new highs. And that's why we like to look at the technicals, momentum, and machine positioning every Sunday to give you the edge to be a better investor and trader. Plus, we've got two big trade setups for you this week. Stay tuned for those. Now let's head over to Goldman, where we take a look at the tactical flow of funds report, as this is a competition for dip alpha, those who can buy the equity dip the fastest. And we heard this before from other investment banks, because we're back to all-time high watch in U.S. equities after a low participation in too random of a week one. Investors are incredibly engaged in actively trading the market, and this was not the case the prior week. In fact, investor performance versus benchmarks has been strong to start the year, as clients were looking to add any weakness to their portfolio. And again, if you're missing the case, everybody's telling you to buy the dip, buy the dip. And if you miss that, well, buy the next one, because the equity markets are going higher. Here's Goldman's position on that. And investment positioning in equities has been the fastest moving non-fundamental systematic trading community near its max long. We'll show you more detail on that, of how the machines are positioned. And investor positioning in equities from household is not long. That's important, meaning they are in position to add. And keep in mind, when you talk about what investors do, they buy the most at the top. I know many of you are saying, look, I can't wait for this to crash. I've got dry powder. I want to invest at the lows. But really, what most people do is they buy high and they chase it up. AUM is massive, but market impact is low. VWAP trading behavior in this cohort is deploying capital into equities through long-only active mutual funds, and that's putting Goldman's desk in a busy place. And positioning from the fastest trading strategies can remain in extended standards as long as there's not a vol shock while everyone else jumps in the pool. They're in the view that this grinds higher rather than a gap up. And how about some other opportunities? Well, one of those we're going to look at is FXI. But first, how about earnings? The bar for Q4 earnings is low, and there's some upside FOMO behavior, given net exposure is not long enough into these prints. This is important. Is the consensus too conservative? Now, keep in mind, these buy-only shops, what do they want? They want you to buy stocks. And if you haven't figured that out, they want you to buy some more. And they'll give you any kind of data, any kind of excuse to tell you that this market, even its all-time highs, is the best opportunity in your life. So one thing these analysts will do is they'll water down their expectations, and then they'll jump for joy, of course, when you see these companies who still have very weak earnings coming out of the fourth quarter will beat expectations. You'll hear the market trumpet this, stocks will rally, and investors will say, gosh, I wish I would have bought in. And that is the goal here, is to get people to buy at the all-time highs. And sure enough, what we see here is quarterly net profit margin is expected to be weak. But of course, if it's a beat, well, look for equity markets to go higher. But how about flows into the Magnificent Seven? Followed the CES conference hike and retail euphoria. This has created a major bid to the winners. Remember, people like to buy the winners, not the losers. In fact, NVIDIA traded 1 million back-to-back days. This is actually fairly staggering, as we see. But how about the machine positioning? And of course, Goldman notes that everyone is a newfound macro bear. Of course, as we know, we do look at the macro data on the show, and it says there's a massive deceleration. But I want you to understand that investor sentiment does not care what the data says. If the market goes up and is making new highs, they will buy, and they will buy it every single time until something changes. And that's what's notable here, because of course Goldman says that was quick and using my own positioning and data against me. And they say, we'll keep everyone updated if and when we need to watch this. But dip buyers will need to run out of gas first, and they are eager to buy. As we look at CTA positioning in U.S. equities, not at extreme levels, but extremely high levels, should be noted we're not going to see much push from machines going forward, even on a global basis, as we start to look around around the world where I think there's bigger opportunities in the U.S. equity market. Notice the positioning here also extreme. And how about systematic macro? These are all of those CTA, trend following, vol weighted, risk parity programs. They are fairly long here. Again, not at the most extreme they've ever been, but pretty darn close to it. And that's important because if you're looking for a push from machines, at this point, you're not going to see it, which again, why we give you the tools to get in ahead of the game of the machines. Now, this is all about retail chasing the market higher. And from a machine position here, you can see over the next 1 month flat tape, only 9.6 billion of buyers, 3.2 billion into the U.S. equity market. Again, not much here. Up tape buyers are 21 billion, 2.1 into U.S. equities. But here's the big one in a down tape sellers, 259 billion. That's 77 billion coming out of course, U.S. equities. That case is not here yet. The trigger levels are pretty far away, so you don't have to worry. But at some point, that will come back into play. Now let's take a look at our own screens, because as we look at the S&P 500, momentum here is positive. The relative strength indicator, it's at 64. It's a good number. We've seen it kind of slow down and kind of try to bottom out. We'll look at the chart here in a moment. The MACD has got a negative cross. Now, this is one thing I want to comment about is so many people just trade the MACD and it puts them out at the wrong time. This is why we have a report called Momentum Timer Pro that takes account multiple technical signals and smooths them out so you're not getting out before you need to. And you'll see why that makes perfect sense here. We've got 5 consecutive daily buy signals on our report. We're holding a buy it open back on November 3rd. Again, we show you how to trade these markets using our signals, getting in ahead of the machines. Right now, you'd be up 10.01%. We've adjusted the stop loss to 464. Friday's closing at 476 and looking to go higher. At this point, our upside target, well, sky's the limit. Downside target down to 467. We saw our machine positioning back off a little bit. That wasn't enough to trigger our stop loss level. We saw a couple sells on our Momentum Timer Pro report, but normally on a 1 month, 3 month, and near 6 month window, we're at max long on the technicals here. Now, this doesn't mean when you look at these reports that the market is going to turn around and reverse right away. What it means is keep moving your stop loss levels up in case there's a big reversal. You'll note again, the machines are not looking to sell here. We still see dips being bought, so you need to give yourself a little margin to trade these, and that's why we see some of these trades doing so well. Let's take a look, of course, at the S&P 500, and we got to zoom this thing out over the 5-year window. This thing is looking to break out over all-time highs, and you want to talk about what will bring retail investors in a big way, and that is chasing the equity markets to the upside. Let's zoom back in here. You notice there's plenty of support. The market came up, and what did we talk about last Sunday? And this is really important, is we heard from other investment banks that said buy the dip, and sure enough, what did we see here? The dip buyers exactly came in, drove markets up, looking to break all-time highs. MACD would have had you selling out well before here. We told you based on reports there's nothing to worry about at this point. Let stop losses drive your sell decisions. Don't let the technicals do that. Let's take a look at the QQQ, because at this point, as far as we're concerned with the S&P, it's going higher. And as we look at the techs, momentum also positive. RSI at 63 and looking to head higher, particularly as we see this blackout window end. And what are some of the biggest buyers of their own stock? That is tech companies. That is what could be the big catalyst here to push both the NASDAQ and the S&P higher. MACD's got a negative cross. Momentum Timer Pro, 5 consecutive daily buy signals. Now look at our machine positioning. It did pull back a little bit. We've talked about that before, where it dropped on our fast algorithm from 100 to 55. You see our slow ones still remain at 100% long, and that all that tells you is kind of bump your stop loss level up. It doesn't tell you to go out and sell. Now here's the good news. There are 3 coupon codes for a free month for both reports. You can grab them. Links are in the description. Sometime this month, programmer told me he's going to get it done, and we're hoping, because we're going to make these signals on these reports so easy for you to follow. Many of you said, could you just show us which ones to buy and when to do it? Well, that's what's coming. Grab your free month. I got some great success stories to tell you. Here we can see back on October 9th, we had to buy it open. This trade's up 13%. Our S&P trade would be up as more had we not got stopped out, but we managed to get back in that trade. Upside target here, well, sky's the limit. Downside 100-day moving average. So let's take a look here at the chart for QQQ. But again, here the problem is we're getting ready to break out over all-time highs, and you can see again, if we made an all-time high, and now it's pulled back. The dip buyer said, come in here, buy this dip, and sure enough, and now they're looking to take this thing even higher. MACD is looking to come back in. That will pull some technical traders in. The RSI is looking to head back to overbought territory just in time for those machines to come back online. How about FXI? This is one Goldman mentioned, one that we like, but we got stopped out for a mere 0.69% loss. Again, keep the stop loss tight on this one, but let's take a look here, because actually that did not update. This should say 4 consecutive daily sell signals. Sometimes I miss things here. RSI is at 39, so this is near oversold territory. Negative cross on the MACD, but looking to build here. So notably, we're going to wait for the CTA MTP combo here. You see our fast algorithm short, our long algorithm is max short. So we want to see this fast algorithm come off this level, and we want to see in tandem now Momentum Timer Pro put up 1 daily count on the technicals for a momentum shift to the buy side. Again, links in the description for below for both these. They're so easy to use, and we're going to make them even super easier for you. Let's continue here. Look at FXI, and what do we have? Friday's close at 2273. Boy, I was off a little bit there. Let's take a look at the chart, because this is bottom fishing at its best, and we're down here, and that's why I kept those stop losses tight. I'm willing to take a small loss here, because if you look at the big picture, and let's zoom out to the max daily, we're way down here, and like we talked about, there's a big move here from right around 21 all the way up into the 30s here. That is, you're talking about over a 50% return potential here. Look at this down here. We're trying to form a bottom. We're looking for our position here to tell you the technicals pop, the machine positionings pop that could come early next week. That would be put in a target here for buy and put your stop loss level somewhere shortly below that, and wait for this thing to turn around. Let your stop losses here do all the work for you. That is key in making this work when you're trying to bottom fish. Don't give yourself too much of a band, because you'll get burnt. Opportunity here at FXI. Again, this is what we like to do on the show you how to make money trading. We give you, of course, our sponsors that we think many of them do well, and many of them actually turn out very well. So we're trying to help you not only understand how the world of the macro economy works, but profit from it. Another way to do that is through the bond market. Of course, we have, of course, that recent trade on that up big. How about from the machine positioning? No push here. They're kind of in a dead zone. We notate that same through Nomura, who looks at the 10-year T-note. Friday's close at 112.63. They're not buyers until you get close to 117, not sellers until you get under 109. Again, kind of in a dead zone here, waiting for the market to kind of move the tape here. Let's take a look at TLT. Momentum's been negative, but this isn't really been a catalyst to sell this. We've seen it pull back on the short term, a fast, what we call their fast CTA model. We have a fast and a slow one. Now, what's important to understand here is sometimes the fast will pull back, and it doesn't mean you sell. All it does means you just adjust your stop losses to your comfort level and let them do the trading for you. Here we have back multiple buy it opens. Remember, we weren't using stop losses. I'm still not putting one on this thing. I'm letting you learn that, hey, if you don't put stop losses, which you should do, and you make a mistake, it's okay. You can dollar cost average in. Right now, we're up 0.35% on this trade. Upside target still at 99.30. Downside target still the 50-day moving average. If you want, you can even look at adding a position again when the short side flips and the technicals flip here, as well as Momentum Timer Pro might suggest. Now let's take a look at the TLT chart. Here you can see, look at this 6-month volume profile. The battle right here between the buyers and the sellers. We got up to this dotted green line. This is really important, because if we zoom out here to the 2-year chart, and then we got to zoom in a little bit, you'll notice what was support. You can see it was support, buyers. Now it broke through support. It comes back in here. What happens? There are some buyers that now want to sell, and they want out of that position. They think they made a wrong move. The question now becomes, can the buyers push back up here into those green lines? And at some point, those sellers are going to be worked out, and that's going to put a bigger move up to the top of this green line, where the next big range of sellers. You can see a bottom forming here. You've got a very soft left shoulder, a big head, and maybe a small right shoulder forming here. A clearly defined neckline. Again, this is an opportunity when it makes the next move. If you haven't added, or or you got stopped out on your positions for a gain, look to take another position here for sure. How about gold? Many of you remain bullish on gold, but keep in mind, when we talk about gold, we don't mean your physical metal you've got at home. We mean you're trading gold, and with 4 tops in play, this is a dangerous one. But again, many people love to chase things at their highs. Momentum here is positive with the RSI at 55. MACD's got a negative cross. Our own Momentum Time Pro's got 1 daily buy signal. Our machine positioning is somewhat long, but not too long. This one, to me, I think there's other opportunities. I would say no position on this one. I'll show you what I like here in a moment, because we do have a position on silver. I think their opportunity there is much, much bigger. Let's take a look at VanEck, gold miners, GDX, because remember, gold miners are a leverage play on the metal. Momentum here is negative, and you may recall that last week I made the case that the likely path for this is lower, and to hold off. Just let this thing come down. Don't try to push the tape and chase it. Look for other opportunities. You've got FXI coming up, and I've got another one for you. How about this? MACD's got a negative cross. Momentum Time Pro, 9 consecutive daily sell signals. We're seeing some downward movement on our CTA positioning, showing the machines, even though they don't actually trade ETFs, we ran the models across the ETF so you could see what it would look like. Downside target unchanged at 2707. I revised the upside target down to 30, spot 83 here. Let's take a look at GDX and see what we've got going on. Look at this. There's your 6-month volume profile. It got right above that, and the sellers came in. Then there was a gap up move on Friday. If this thing continues to see sellers in here and push down and break through those buyers on Friday, look for this to come down into this $27 price range. As we told you before, that's where you want to look to buy. Doesn't mean you want to buy there. It just means you want to look to buy, because if it breaks down out of that zone, well, then you've got a problem, because that means it's headed all the way down into 23, where there's going to be huge opportunity. But in the short run, you can see this is the volume profile. This is the line in the stand. This is where the battle's happening. Hold off on this one. Look for something else. Now, something else was a trade we put on for silver here. RSI's at 42. MACD's got a negative cross. We put our stop loss level at 2042. Didn't breach that, came somewhat close. Friday's closing at 21.19. We're down 3.29% on this trade, even as our own technicals have 10 daily sell signals. We're going to hold on to this one, because again, I think there's some upside potential here as we look to see, of course, the dollar weaken at some point, but there just isn't enough catalyst here to sell. I want you to understand, I'm letting the stop loss to decide. A lot of people say, when do I sell? When do I sell? Just let your stop losses aside. Where's your comfort level in terms of your loss or holding on to your gain? Let them do your work here. In this case, I think there's some upside potential. If I had to pick one of the metals or the miners, right now, that answer is silver, as you can see. Let's take a look at the chart on silver here. It keeps coming down into the supply zone. Supply zones are where buyers are at or sellers are at. In this case, what happens when silver gets here right between roughly 2042 and say 21, buyers step in 1, 2, 3, 4, 5, 6, 7, 8 times. Of course, they broke down and buyers jumped all over that. Tells me a likely path for silver is up. The sellers are way up here in the $23 price range. This would put up a nice little trade in the short run, though. So we're going to hold on to this with our stop loss level just below that as we look for other opportunities. One of those, I think, is in agriculture stocks here. This one we have position on. You might remember I forgot to put the stop loss on, which is okay. We're only down 1.81%. We have 16 consecutive daily buy signals. Here is a big opportunity for you, because the RSI is at 37. The MACD's at a positive cross. Now, you may remember we put a position on this and it had a massive gap down. And I told you this was a buy on Monday. Well, we ended up buying that gap down on Monday, down a little bit here, but the opportunity, I think, is huge. Downside target just below. So if you're trading the reports, look for this CTA positioning here to come off of this massive short, because this is telling you on historical basis, we're massively short here. This is unusual, historic anomaly. And then you have 16 consecutive sell signals on Momentum Time Pro. Opportunity on DBA knocking in a huge way. Let's take a look here at DBA. It came down in just above the supply zone, found buyers here. This is opportunity. We got to hold on this. We got stop loss level below here. A weaker dollar could be a huge catalyst to send this higher. And of course, we have buyers down here holding this. So keep in mind, again, we're letting the stop losses do the work. If you're looking for perhaps a bigger opportunity than DBA, look no further than soybeans. RSI is at 28. MACD's got a negative cross. This thing's deep and looking for reversal. And this is what our reports help you do. 30 consecutive daily sell signals. Look for a turnaround here. You got a max sell on the 1 month window. We've been telling our subscribers to wait for this. There's your opportunity. Look at our CTA positioning. It's telling you the machine's max short across the board. This is huge. Look for a flip in those signals, and there's your opportunity to take a flyer on soybeans. Here we have the supply zones drawn in. You can see it drop down here, found the supply zone where buyers were previously at, popped up into a sell zone. Same day on Friday. Guess what? Sellers came back in. If this goes down, wait for it to settle, wait for the machine positioning to shift, but there's huge opportunity here in soybeans, and not to mention, of course, DBA. And that brings us back to the dollar here. We noted last week, some of you said, hey, you've got some investment bias. I said, look, I didn't think the dollar was going to rally. And sure enough, it didn't. It closed roughly at the same price it did last week. We see our momentum time pro has 3 consecutive daily buy signals. The RSI remains near oversold territory. The MACD's got a positive cross, but our machine positioning came back online. And what happened? Well, very simple story. The market thinks rate cuts are coming. They think that's bullish or bearish for the dollar. That means they're selling it. So even the dollar bulls here are going absolutely nowhere. As you can see here, let's take a quick look at UUP. Kind of rallied up here and then went absolutely, well, nowhere. So if this rolls over and heads down, which it very well could as we come into the next FOMC meeting, look for, of course, more dollar weakness. Could be a big catalyst for some of our trades on silver, DBA, potentially jumping in on FXI, and of course, soybeans. So check those out. And with that, I'm Steve Van Meter. Thanks for watching. Thanks for being fans. Bye now.